everyone, it's Roger Phipps, and it is episode 19, I can't believe I'm saying that, of UCF Business Talk Live, the show that brings together alumni, business leaders, and entrepreneurs to help you learn and succeed. My name is Roger Phipps. I am COO and co-founder of Seven Lights Marketing, Bird Eye View Inc., Very, and also your business, marketing, financial operations, and leadership consultant. So that was a mouthful, and we've got a big show ahead for this week. We're going to be talking about management and growth with a UCF alum and very successful COO, local in the Orlando market. We're excited to have him on the show. His name is Guy Colangelo. And yes, I checked to make sure I said that right before I started. So let's bring Guy to the show. Hey, Guy.
Roger. Hey.
Welcome.
Thanks for having me. Yeah.
Thank you for spending an evening with us.
Sure.
This could go one of two ways, either great or horribly wrong. And I think it's going to go great. So I'm excited about that. Next, we're going to bring in Josh Lazar, the CEO of Tech Think Tank. Hey, Josh.
Hello. How is everyone doing today?
Awesome. What shirt have you got on this week? Let me see what you got going on there.
This is actually from nope. Got to do the other one. This is from Sim Central Florida. It is a organization that I am on the executive board for here in Orlando. The Society for Information Management. Ooh, I'm terming out. It's been about 6 or 7 years. They need
Are you terming out or turning out? Which one?
Both.
Oh, all right.
You can turn out to a golf tournament now. We'll talk about that later.
All right. And next we're going to, but certainly not least, it's Alan Levin, looking dapper from Smarty Pants with a Z. He still isn't doing the Zorro thing, so I'm upset about that. But Alan, welcome back to the show. Excited to have you back.
Hey guys, how's it going?
Awesome. So jam-packed show this week. We're going to put Guy on the hot seat to tell us how he has become a success. And obviously, as I mentioned, he's a UCF alum, very successful in his own right in marketing. As all of you know, we talk about marketing somehow a lot. Both Alan and I are in marketing as well. Josh, you just need to get there. So other than that, I'm going to let Guy kind of kick it off here, tell us a little bit about himself and his professional UCF and professional journey and what he does. So Guy, I'm going to put you on center stage. You're going to be on the hot seat first.
Sure. So I graduated in 2005 with a marketing degree and a minor in MIS because I wanted to get into data mining. But then I got into the data mining graduate program at UCF, but I also got a job offer, and job offer was pretty good, well above average salary and straight into management. So I took the money. Never went back, and no regrets. But from there, I spent some time at a hotel company, boutique hotel company, managing the Americas regions, sales and marketing, partnering with airlines for joint promotions and stuff like that. Then I got involved with a construction information service provider. It's basically a subscription service for contractors to find projects to bid on. And then I got involved with an agency, a local agency here in Orlando that deals mostly with automotive. So helping out dealers market and advertise their dealership. And then I landed where I'm at now at Celebrity Branding Agency. I came on as a CMO and got promoted into the COO, which was interesting transition.
Yeah, that's a totally different skill set as a former COO and current COO for multiple businesses. That's definitely a different hat. I mean, you can definitely take, from a process perspective, you can apply that to marketing, especially if you're doing it at scale as an agency. But it's certainly a different skill set. Was that challenging for you to kind of like pivot that way?
Not really, actually. Well, after being in marketing for so many years, it's kind of refreshing to jump into something new. But I've always been a process-driven marketer, systems and process-driven, which basically is, it's operations. I mean, it was just in marketing. So I just basically took that skill set that I would apply in the marketing department or whatever, and just applied it company-wide, basically. I don't know, like to me, a lot of businesses just don't overthink it and just use some common sense. A lot of people, I think, tend to get involved in the weeds too much and don't see the bigger picture. And get lost. So I think the key is just staying focused.
Yeah, it's from my own experience, it's difficult with creatives to have that process mindset.
Well, create. Yes, that's true.
So a lot of creatives, a lot of CMOs out there are creatives. So when you're dealing with an agency, it's tough for them to kind of make that switch.
So my marketing background is really a direct response marketing background, which is very much scientific A/B testing, data driven process. It wasn't really much creative. And I usually put a buffer between myself and the creative team anyway, just because I knew that, they won't like working for me. So
that's funny. All right. So, I guess we're going to be talking a lot about management. And, we talk a lot about leadership and management and the differences between the two, but how they go hand in hand. Right. And to kind of, last week we talked about mentorship. I'd like to sprinkle in a little bit of that at the beginning of the conversation before we get into the management pieces, so that we can kind of build that bridge and how, from your seat as a successful business leader, what are some keys that you can impart so that we're not completely in an echo chamber?
Meaning how you break down silos? Is that the question?
Well, just in mentorship in general, what are ways that you have engaged with mentorship,
Okay.
And provided mentorship, or
okay. So I very much subscribe to the weekly one-on-ones. And I do it weekly. Some people say bi-weekly or monthly, and it kind of depends. But the reason I do weekly is because sometimes it just doesn't happen. So if I put 4 in the books to the month, I could probably get at least 3 in between vacations and sicknesses and time off, whatever. So the goal is not to have 4 every month. The goal is just have them scheduled and really stick to them, unless if you're out or whatever. And then I kind of separate the meeting between development and mentorship. So I kind of draw a line there. Development is more about the prerequisites, if you will, of doing the job. And mentorship is kind of like the real growth of, being a much better version of yourself and, helping you learn new skill sets and things like that. So, that's kind of where we start. And development is really just focusing on one thing at a time, one task a week. And then, I schedule 30 minutes for my development meetings, and the goal is to have them done in 5. Until once you get into a rhythm, it's really quick. It's just like a check-in. And then when you're ready to work on a new thing, then it leans more towards 30 minutes. But once the people are, where they need to be, quite frankly, then it's like, all right, now what are you interested in? What's next? Where do you want to grow? Where you see yourself in 5 years? And then, kind of like helping them get there, one thing I tell everybody when they start to work for me is in 5 or 10 years, we're not going to be working together. It's just the odds are against us. Like we will not be working together, but while we are, let's help each other. It's kind of like how I open every relationship. When I get into
That's interesting.
Yeah. Just pop in here. Do you find that those that you're managing find that different or refreshing, or do they come off like, that's an odd thing for you to say? What reactions do you get to that? Because that's not, like Roger was saying, it's not the traditional methodology.
Yeah, it's the people who don't. It's kind of a self-selection, if you will, because some people are like, "What do you mean? I'm gonna get fired? Like, what do you like?"
Okay.
And then I'll explain it. Some people just get it, and the people that usually just get it are really the ones who end up working out really well.
Yeah, and that makes sense. And to be honest, I believe in that same type of methodology too. It's just there are certain managers that are, I want to hold on to you for dear life, and others that are, my job is to build you up so you can either move up, replace me when I go somewhere else, or do something else. So that's great. I love hearing it's not just me. So that's wonderful.
Well, and I think I don't think either one is right or wrong. I think it's just a style or a preference. And so my focus is finding the people who I could rally, who want to be here, want to work with me. I get people that follow me from company to company because they want to continue to work for me. So like, it's like I don't know. I make them choose, I guess, in a way that, like, because I don't have a tolerance. I don't have a high tolerance for incompetence, and good or bad, PC or not. Like, I just can't tolerate stupidity. I can't tolerate incompetence. So I keep telling everybody, look, A players only. So I have a manager that's working for me now, and we're building out our social media department. And he is an A player, right? He is on top of it. He gets to me before I get to him. But he's young, right? So he had to start now building out his own team. And he's like, "Oh, I never hired before." And like, and this is an A player, like he's in mentorship area. So I helped him throughout the whole hiring process and stuff. And I basically gave him in like a week what took me 10 years to figure out, like, and that's rewarding for me. But he enjoyed it. So, that's I guess that's one example of the difference between development and mentorship is, now he just grew into being, knowing how to hire well.
So curious, and this kind of relates to mentorship and management, right? So what if you come into a new organization? So you've moved to different organizations too, right? What if you come in and you have some B players or maybe C players? How does that work in your ideas of how mentorship and management?
Well, let's that's a good segue, Josh,
Okay.
into the next topic that we had, which is guys' management philosophy, right?
Perfect.
So
Look at that. It's
so
yeah.
organic.
So real quick, there's A, B, C, D players, right? A players are high culture, high skill, right? It's a matrix. High skill, high culture is the A players, right? High culture, low skill are the B players. High skill, low culture are actually the C players, and low skill, low culture are the D players. D players, if you identify a D player, out. Like no culture, no, like, out. Like, they're like just as quick as you can. They're very detrimental. C players are the sneaky ones, because you got to be careful that they're high skill but low culture, so they tend to rally people that in a way that you don't want them to, type of thing. But coming into a new organization, the first few months, and it's not a hard timeline, but it's roughly around the first 3 or 4 months, I'm just focused on deposits. So it's like, I view people as like an emotional bank account, right? So when you open up a bank account, before you can withdraw any money, you have to deposit money into a bank account, right? So before you can make any withdrawals from people, you have to make deposits. So it's like, where are the easy wins? Like, I'll be frank, like with the CEO, it's like, look, I'm going to ask for some stuff that you probably don't want me to do, but I just need you to do it so I could make some wins with these guys, right? Because then when I ask them to do other things or I start making moves, they get it. You know what I mean? So it's all about making the deposits before you make the withdrawals. When you're facing a new when you jump into a new organization, or when you have a new hire, also, like, the honeymoon period. I don't know if you guys are like it's like the first 3 months or whatever, but it's all about them and making deposits before anything else. Unless if there's major red flags or something like that, then that's different. We'll just stop.
Well, let's talk about that a little bit, right? So for me, when we're talking about leadership, mentorship, and management, right, one of the things that's important is that you're setting expectations, that you are setting a culture of mentorship and leadership, right? But you do have those bad actors. So the question is, for me, I always advocate the 3 strikes you're out rule, right? We're going to have a conversation.
Yeah.
It's going to be documented. First it's going to be like documented in I have a spreadsheet that I keep. Every coaching conversation that I have is in there, right? So I can say what was said, what was agreed to, and then the date, so that if you ever have any performance management, that's something we really haven't talked about on the performance management side on the show. It's really important that you have documentation to back yourselves out, so that if you have a situation where you have to exit someone, it's not just to give them the opportunity and accountability for both sides, but it's also a paper trail for you to be able to exit someone without them filing a complaint somehow.
Yep.
Being sued. You could be blunt. You need a paper trail if you're doing it the right way to avoid being sued. And you still might, but you have that. Also, workman's comp if you ever have to deal with that.
Yeah. So I hate documentation, but you got to do it.
Or unemployment. But yeah, but you need it. It's true.
Yeah. So similar to the 3-strike rule, I'm big on no surprises. So like I always tells anybody who comes to me, oh, I gotta get rid of this person. Like if you tell them they no longer work here, are they going to be surprised? And if the answer is yes, then you gotta you gotta go back and do your job, because your job as a manager is to communicate. I mean, and make sure they're, so basically, the 3 steps are, at first I start with I want, right? So, and I specifically say these words, I want, and then whatever I want. I want you to start showing up in a more professional environment, or, because with the remote stuff, like the guy looked like he was walking out of the gym. Like, you can't show up here looking at the gym, man. I want you to start looking professional. You know what I mean?
Josh, you gotta stop joining us on the show looking like you walked out of the gym, man.
I don't work out in polos. I work out right in like Peter Millar's.
The hair was all over the place. It was like holes in the shirts. Like anyway,
holes in the shirts.
That's a little beyond coming up in like gym, like Lululemon or something.
He's a green kid. Like he's really young. It's his first real job. I'm like, this is your first real job? He's like, yeah. I'm like, all right. Look, you're a professional now. So we had that conversation. Anyway, first it's I want. Then if it's not happening, then I escalate to I need. So then I'll say specifically, I need you to. So the tone changes, I want, and then I need. And if it's still not happening, whatever it is, then it's you must or else. And this is where the consequences come. So now it's hey, you have to start showing the work on time. Otherwise, you're not going to work here anymore, right? If that's the situation. So if it's, I mean, that's an easy one. It's very rare, but hey, I want you to start showing work up on time. What's going on, right? Hey, I really need you to start to show up on work on time. You're constantly late. Hey, you must start showing up to work on time, or you're not going to be employed here anymore. Like, and so that's the steps. And then if I have to take action on it, I mean, if you're still surprised after that, then there's an issue. But usually there's no surprises.
So Guy, to dig a little more detail on that, and just because I want people to hear this that may be listening to the show, right? So when you get to that, last stage, have you done any of the documentation up to that point? Because like for me, I'm starting, okay, so you've got a conversation that's a verbal, right? That's documented in the spreadsheet.
Yeah.
And if I'm going to a second one, I'm pulling in the exact date, conversation, what we agreed to, what behavior I'm seeing, what the expectation is, and them agreeing to that. And then if it's a third one where we're having another write-up, then you're done. So
yeah, there is. It really just depends on what it is, like what we're talking about. If it's something that needs to be improved, but could take a few months, and then if you can't get it after a few months, then it's probably just going to show up in monthly reviews. If it's much more severe, like you're not responding to any clients, then it may be like an every 3-day type of thing, or in the weeklies, right? And then just document it. I probably don't have the best documentation practices. I don't know if you want to interview me on documentation, but what we do,
I can help you with that.
What we do is monthly reviews. So one of the first one-on-one every month. Let me give you some context. So I worked for a company where we hated the review process. The managers hated it. The employees hated it. It was the typical annual 50-page review that by the time no one wants to fill it out by the time you get to it. So it's just rushed through on both sides. Then you sit down with the HR manager in between and they kind of go over it. And it's like, this is not effective. Like everything in here, we could have been working on a year ago if we were just communicate, So we killed it and we went to monthly reviews, and it's just one sheet of paper. That's it. It's not 50 pages, nothing. It's just one side of one sheet of paper. And there's 2 to 3 performance metrics on there. Meeting, exceeding, or whatever, and then we list out the culture, our values, our core values, and then we rate them on each core value every month, like how they're doing. Like, so one of our core values where I'm at now is people first, right? So we would discuss how do you think how was your people first last month, basically, like and then they would rate themselves, I would rate it, and then if we're the same, of course, like, so we'll fill this out together. And if it's the same, obviously we don't have anything to talk about because it's the same. But if there's a gap, then we'll stop and talk about it. And sometimes it's I wasn't aware of something or whatever, and so I'll adjust what my score would have been, or sometimes I'll give them an observation that they weren't aware of, and they, oh yeah, okay, right. And then we'll get into something from the book Traction. I don't know if you guys are familiar with that. It's like the entrepreneurial operating system. It's a fantastic book, and it really is an operating system. But basically, they have a thing in there called GWC, which stands for Get It, Want It, and Capacity to Do It. And that's a binary measurement. Do you get it, right? Do you get the responsibility? Do you get the processes, the culture, the systems? Like, do you get it? Do you have the capacity to do it, which is the skills and all that stuff? And then do you want it, which basically means are you happy with the pay for the responsibilities? Because sometimes you probably run into this a lot where somebody feels like they're worth more than what their responsibilities are. Well, that's another way of saying, well, then you obviously don't want the job. If you don't want it for $60,000, if you're not happy with this job at $60,000, you want $80,000, then you don't want the job. You only want it if you get 80. So let's just, this is what this is about. You know what I mean? So it's binary. It's yes or no. There is nothing in between. And if it's a no, it's kind of like an automatic write-up. You know what I mean? Like a no on a GWC is like immediate. Like there's zero tolerance for that. The values, it depends. If it's a plus minus system, so the plus is most of the time, the plus minus is sometimes, and the minus is not usually. If they're a minus on any core value, it's almost like an immediate action too. And if there's a few plus minuses, then it's like an immediate action. So
Guy, let me pause you there for a second, because I'm very much like you, numbers guy, process driven type of person when it comes to the management side of things, right? Because you can see gaps in the numbers and fill them and then measure them and then remeasure them and measure the progress. So one of the challenges with annual reviews, usually there's a scoring system, 1 to 5 or 1 to 3 or whatever you use, right? And when we've talked about this in the past, one of the things we absolutely do, or I have always done, is make sure that I'm assigning those KPIs to specific measures of success, right? So, okay, whatever that productive capacity is that we're measuring, or whatever it is that we're measuring, it's this equals 100% equals a 3, because that's what the expectation is, right? And so forth. However, one of the things that I've always done also is have those type of, like you're describing, those core value type of KPIs around there. Do you weight them? So like what I'm hearing, when I'm hearing from you, like, and this is just me having a discussion, right? If I were your employee and I'm sitting there and you've got, okay, these are my measurables that I have control over, right? And then these are the GWCs. That seems very much like a subjective versus an objective measure. So if it is, do you weight those things differently? Because we always have weighted, I have always, when I built that system up, I'm a we person, not an I person. So it's, it's natural for me to say we, but I always weight those differently because A, they are subjective, and B, unless you've broken those out to something tangential that you can say, then it's very hard for me to say to an employee that's sitting across from me, hey, this is where I feel you are versus this standard, and what they feel they are versus that standard. So how do you deal with that? So
I understand what you're saying, but that's not the experience. Like, and maybe what it is, it's making the subjective objective. I don't know. Like the performance metrics each month, those are objective. It's like, sales is easy. So it's like this money of sales, right, per month, right? So you got what the number is, and you got what you actually did, and you could figure out where they are, right? Where the case is, response time for clients and stuff like that.
Net promoter scores.
That is that's totally objective. That's easy.
Yeah.
The culture stuff and the GWC part, is never an issue, quite frankly. Like, people understand what the culture is. Like, we recruit on culture, we put in the job description, and we have a process for hiring, and there's a whole culture step to identify people who fit the culture, because the culture are your core values, essentially. So most of the time we're on the same page anyway. Like I'll say, because I'll let them lead it. Like, all right, so people first, how would you rate yourself, is what I'll say. And then sometimes they'll rate themselves poorly. Like, they'll be honest, like,
Well,
because
people have a tendency to weight themselves worse than what they actually are. There's like there's a psychological studies that are around that, that people, when they have something like that where it's not numbers driven, they always usually underscore themselves versus overscore, unless you got a narcissist who really doesn't care.
So when we do that, and that's times, I guess there's psychology behind it, but that there are times when they rate themselves lower than I would have rated, and I'll tell them,
Yeah.
I don't know why you gave yourself a plus minus. I think you gave yourself a plus. Why did you give yourself a plus minus? This is just a healthy conversation. You know what I mean? It's having a healthy conversation around something that's really important to the organization, and you just listen to each other, and then if everybody is an adult, it's easy to come to a consensus really quickly. If it's a problem person and they keep fighting, well, you got a different issue, but that they're not going to have the luxury of sitting down once a month, have a monthly review. They won't be here. You know what I mean? So
That's interesting, because like, to me, like, I would think that if you can't come to some congruence, right, it isn't necessarily that it's a problem child. People will have a tendency to say, okay, you're my boss, you're setting the expectation, so I'm going to defer to you, even if they don't believe that particular. And I'm just speaking from my experience, right? So it's an interesting dynamic for me, because I went from a similar experience to what you had, where people coming into organizations and it's completely arbitrary, or they wait till the end of the year and all of a sudden you get an assessment. So my approach from a management perspective to support that leadership perspective is visibility and accountability all the way up through the chain, but also specificity with regard to what those results are, so that when you're in your weeklies, like, I always build scorecards for everybody, so that they know exactly what their score would be. If we ended it right now, for this month, you'd have this score, and cumulatively, this is what it would be for the end of the year. So it's interesting, like, hearing you talk about this, because your philosophy and your experience, and you're obviously successful, is different than my path, or the path that I would have went. So I'm glad that you're sharing this with us, and that's the point: is divergent viewing points and still to success.
Well, well, I had to grow into it, honestly. Like I didn't start like this. What I learned throughout my career in the later half is that at the end of the day, it's a human being, right? So there's emotional and there's logical, right? Logical level communication is emotional level of communication. No one feels heard until they felt heard on the emotional level. So some people naturally speak in that way, and you just start there. Some people don't. Like, I don't. I speak my main is logical, and then we get to emotional, and then after that, then you'll feel heard. So, and then once you feel heard, then obviously people, it's what is it, Stephen Covey's, rule. So, it's just being human. Certain things are just not, you can't make a robot out of them. Like, values are so subjective in the first place. How can you put a score on it? And so if you try to, it would lose credibility, I think, if you try to do that. So, all I could say is we never really had an issue with it. So, it's working.
Well, and that's the point, right? So diverging viewpoints to success. So we've kind of talked and delved into, like, a little bit, touched on KPIs. We've touched on scorecards. We've touched on some of those numbers driven aspects of this as well. So as a COO who's operations focused, what are the things, what areas do you measure? And then how are you doing that? Are you doing that via software? Are you, how are you generating that reporting? Are there any reporting tools that you're using? What kinds of things do you do to make that, to be able to do that?
So I think it depends on which level you're asking. So as the leader of the leadership team, we meet weekly. We have a weekly scorecard, and the way we view it is basically if I was stuck on an island stranded, what are like the pieces of information that I need to know just to see if everything's working properly. So I don't need a full on report. I just need certain parts of the business pieces of information.
Right.
So just to see if we're on track or off track as a business, you know what I mean? So for example, sales is obvious. Finance, there's a lot of finance numbers you could pick out. The only ones I care about is how much cash came in this week, how much cash came out this week, and how much cash do we have in our bank account. Like we have an accounting meeting later on that day where we go deep dive on accounting stuff. But for the leadership team, it's like, all right, we're good with cash. Cash is good. Let's go. Let's keep going. You know what I mean? So that's what we're looking at from a number standpoint. From there, outside of that, I subscribe to the belief. I forget where it comes from. I didn't make this up, but everyone has a number. So and then each team has a similar meeting format. It's called a level 10. It's from the book, Traction. It's considered level 10 meetings, 90-minute meeting structured in a way that's designed to be extremely productive, pull out the core issues of the organization that's going on day to day right now, and then address those issues and solve those problems, and then manage your to-dos and all their stuff. So it's all built into there. But then I introduced that concept down each level. So each director is having level 10 with their teams. Each manager is having a level 10 with their teams. And obviously the different levels will have, different types of issues and things like that. So that's kind of what I'm tracking weekly.
How do they bubble those up to you? So if you're seeing that's one of the challenges as you add layers, right? I'm a big fan of flat organizations as much as I possibly can. But
it depends on your size, but yeah.
Yeah. So if you're thinking about layers, right? And you've obviously articulated, you've got the C-suite level, then you've got your director or VP type level, then you've got your manager level, then I don't know if you've got what your org structure looks like below that,
specialists and stuff.
Yeah. So how do you bubble up those core issues that are coming up at those lower levels, but they're important to make sure they get to you?
So when I first took over and I pulled up the hood big time in the operations department, I realized that we have a serious accountability problem. Like serious. And the operations team is our largest team. So what I did was after, I don't know, a few weeks or a month or whatever, I forget how long, once I figured out what was going on, going back to everybody has a number, I reorganized the department into, it's more, this title is really from like a technical space. I just adapted it, made our own definition. But so as a company, we do a lot of projects for media. So we'll do books, we'll do TV shows, we'll do films, we'll do social media and all this other stuff, right? So it was all over the place. So what I did was I made product owners for each media types. Now I have a head of books, I have a head of TV, I have a head of events, I have a head of social media. And everyone has one number, which is how much gross profit did your unit bring in this month? So, which I think is probably not normal to have that in the ops team, but at the same time, I don't care. So I need to know, the reason you exist, we're a business. The reason you exist is to make money, right? That's why the company exists, is to make a profit. There's nothing wrong. Like a lot of people view profit as like this whole
I know.
Yep. But a lot of people view profit as like it's a bad thing, it's evil. No, it's actually what gives you the money that you have to feed your family and have your lifestyle and all other stuff, and allows us to hire more people and support more people, right? So profit is good, not bad. And so that's what I need you to focus on, is profit. And because sometimes we'll have a project and we'll budget, 25 clients in the project, and for whatever reason, we didn't get 25 clients. We got 17, let's just say. So So Mrs. Product Owner of books, we only have 17 clients in this project now. How are we going to make our margins? Right. That's the conversations I'm having with my ops team. Right. And then yes, there's project management. We use Asana. We built out templates. I did a lot of work on that too, more of the day-to-day stuff. But the one number that I really care about from them, and I ask for every month. So in our weekly level 10s, the first level 10 of every month, they have to report what their gross profit was for that month. And that's, to me, the simplest way of accountability. And because accountability to me is not like you're fired. That's not accountability. That's a consequence.
Right.
Accountability is just the act is clearly identifying who's answering to what.
And what they're doing about it, coming to you proactively about what they're doing.
But who's going to answer for that? That's accountability, right? Yeah. Whatever the answer is, maybe they don't know, maybe they have a solution, whatever. But if like when there's no accountability, it's like, all the lines are crossed. Well, this person did that and that person did that, and so no one's answering for it. So there's no accountability. So when it's just you and you're solely responsible for that, and it's like, there's no excuses at that point. Like if you overspent on something, but you shouldn't have because we didn't have that many clients in it, well, that's on you, right? Why'd you do that? Oh, I forgot. Or we were okay with it, or whatever, and because sometimes it's not a negative thing either. Like sometimes we'll make a business decision that we're going to take less profit on this particular project for whatever reason, right? But at least we had the conversation. You know what I mean?
Yeah, like for me, what I always did is each one of those levels is I always create, they have their own, whether they're a profit center or a cost center, right? Mm-hmm. They have their own financials that they adhere to. And those are built into their those KPIs and those dashboards that we were talking about earlier.
Correct.
That's built into that as well. So that's part of your, like, whether you're successful for the year or not, and what your either raise is or anything else, it's all built into that. Yeah. So, and those flow from the top. So like if I'm budgeting for the year and I've got that budget, I'm going to break that down into how we're going to contribute, right? Finance will help you with that. Accounting will help you with that. And you have that discussion back and forth at my level, right? And I'm advocating for or against certain things. And then that breaks down at each level, all the way down to the individual contributors. And they have visibility into how the department's doing, right? Because, hey, what you're doing and your success and your individual piece of this pie is adding to whether it's a profit center or a cost center, successful from a business perspective. So 100%, agree with that visibility and accountability, and breaking that down all the way down to your salespeople, your leaders, the folks that are creating the creative. If you've process mapped everything out, these are the critical points that we've built your KPIs. Are you meeting those metrics on an individual level as a leader or an individual contributor? And I think that's extremely important because, to your point, the business is there. And the way I put this, because you mentioned this about profitability, right? Especially in the credit union space. I spent a lot of time in the credit union space. Like P was a 4-letter word, right? Well, when you're talking about profitability or sales, right? That was also another 4-letter word. But what you're really doing is advocating, right? If you believe in what you're doing and that you're providing value to the clients that you're providing, you want to be profitable. You want to advocate, sell, right? Because you're providing value to them that they wouldn't get anywhere else, right? And then on top of that, at the end of the day, that profitability that you've built in, right, goes back to your ability to help more people and executing on your mission as an organization and what you're trying to do. Right. And so it all goes back to my 3 rules. And I've said this ad nauseum on the show, which is people do business with people they like. Both parties have to get something out of it, and there has to be equity in the relationship. Now, if you're going out there and you're gouging people and you're not providing value, right? Because value is driven on what they receive versus what you're charging them. It's okay to get margin on that, right? Because your skills, especially in marketing, people forget this. Your skill set, your ability to deliver on it, your process to be able to do that at scale. All of those different things are value adds that you're providing to that transaction for that individual, because the quality and the knowledge that you have and the ability to deliver on whatever it is that they're delivering is going to turn into revenue on their side, right? And that return on investment. Yep. So I'm sorry, I feel like I'm getting up on a soapbox, but this is something I harp about all the time, because it's extremely important that people realize, and this is something that even if I'm talking to an individual contributor, you have a piece in making this thing go. And this is how your piece and your success drives our mission, right? And that mission does not move forward without your ability to execute on your part of that plan. You're not just doing it because it's your job. You're doing it is because it builds up into the rest of the organization and our ability to do what we do. And then when you go back to that culture piece, if people don't believe in that and they don't understand that's how they deliver on that mission or whatever your mission is, right? Then they're the ones that are going to be the lowest performers, and those are the ones you want to exit. So I know we're tying all these pieces together, but it's funny because a lot of the stuff that you've talked about you're just talking about it in a different way, in a unique perspective with a different driver. But there's a lot of parallels and alignment there, and I love it. So, Alan, before I go any further, you've been absolutely stoic, and you look great tonight. Got all cleaned up for us. So, I want to make sure you have an opportunity to say whatever, because you have great questions all the time. About the stuff that we've talked about. Is there anything that you want to point out or talk about here with Guy?
Yeah, Guy, I'm curious. You talked about A players and B players and C players. When you do have a B player or a C player, I mean, do you typically feel that the mentorship or the leadership can bring them from a B to an A or from a C to an A? And typically, what's the time frame and how long you're expecting them to improve those results and ultimately become an A player? Or do you find mostly like, Bs are going to stay Bs, people are who they are, or does the mentorship really kind of move them up that ladder?
So when it's high culture, low skill situation, it's all about training. So that's where the focus is. It's all about training. Those people are usually more successful becoming an A player. And it's also less of I mean, unless if you're completely incompetent and you don't know what you're doing,
right?
But you're amazing culture fit. I mean, there's no room for that. So when I say there's skill, I mean, there's at least some skill, but there's not like where you need to be type of thing. That's just pure training.
Like you lied on your resume.
Yeah. The low culture, high skill people, that's coaching, right? So that's the candid conversations. That's the constant feedback loop. Most of those people, from my experience, are not successful moving to the A pile and end up working themselves out anyway.
Okay.
Because now you're holding them accountable to the culture, and they don't like that. And they'd rather leave than if look, the culture, our core values we have 6 and we treat them very seriously. And when we're looking for people, we're not looking for people who understand and can fake the core value. We're looking for people who actually, have that same or similar, they may say it differently, but have the spirit of that core value in them already. Right. And that's the trick. Like when you hire on values and stuff like that, a lot of people say, well, let me ask you a question about this. Oh, they had a good answer. What you really need to find out is if it's really in their core anyway in the first place. Because from my experience, if it's not, it usually doesn't work out. Even if they like the core value and try, it just, doesn't work out.
Makes sense.
Yeah, it's interesting because we talked about Disney, right? So I worked for Disney for a while as at a Fortune 500, and so it's difficult when you have disparate teams all over the place, right? So one of the ways that we countered that was we actually had a 3-person interview panel always. One of them, one person was asking about specific things, because in every role, right, you have a general set of things that person does, but there's something that you're missing that you're looking to fill typically.
Yeah.
Right. So you have one person that kind of highlights that. Then you have the second person who looks at, okay, is this person a fit for the organization? And they're asking those culture questions and things like that. And then the third person is going to be sitting there and just observing. And if they see something that seems off, or it seems caged, or it seems, flaky or whatever, or staged, then they go and delve deeper into that. So, my philosophy is if you've gotten through my process to get where I'm giving you my time, I'm going to assume you can do the job at that point. I'm just asking pointed questions about what I'm trying to fill.
Right.
And then trying to see the fit, right? Because everybody you bring in changes the culture just a little bit, right? And then lastly, what are those, what are those things, those red flags that you're seeing with someone who's just a really polished interviewer versus someone who's actually going to be able to fit? Because because you're in the organization, what you're looking for. So it's interesting that you look at it that way too, because that's something that served me well over the years.
Yeah, and actually, your three, is it three people in the room at once? Is that what you're saying?
Mm-hmm.
So I actually just learned something recently from our CFO, actually, on hiring. And he called it a 3-3-3 rule, which is 3 candidates who speak to 3 different people in the organization, and the hiring manager has 3 separate conversations, is what that 3-3-3 is. And I thought that was really good because we had the 3-3 rule. We didn't have the 3-3-3 rule, and what was missing was the 3 conversations with the hiring manager. So I started to do that, and basically after every so if I'm hiring, it'll go to me, then I'll go to somebody else, and they'll go to our CEO. If my manager's hiring, it'll go to me, then our CEO, and you basically have a conversation after each conversation, essentially after each interview. And what was interesting is every conversation as a hiring manager, every second and third conversation, you start to see the real them. And sometimes it's not the same person. And I'm like, man, I'm glad I didn't hire that person. You know what I mean? Like, so it was really, I don't know. I just wanted to share that because maybe it's standard for everybody else. I didn't know, but for me, that was pretty like simple breakthrough,
Yeah, we in my past, it's always been 3 people in the room, but then you have another manager that's tangential or leader that's tangential to have an interview with them as well, and then you have a third interview as well. That's a different panel, right? And you bring that original hiring manager back in. So it's close to what you're talking about, but the more eyes and people. When you're interviewing, you tend to ask questions or react a different way. The hiring manager is looking for very specific things. Other people are seeing other things. So, yeah, I agree with that. All right, so let's. We're at 48 minutes of a great conversation, and I think we're going to have another one at some point down the line because it's been great. But let's move on to our next topic because I feel like we could go like probably 2 hours on that, and I'm not sure if everybody has the stamina in the viewers. So what should this is another ops specific question, what should your ops leadership bring to the table?
So basically, what should your COO bring to the table?
Well, no, I'm going to say ops because as you grow within an organization, right? So like we were talking off camera about my experience building an organization from like a few employees all the way to multiple hundred employees in a very short period of time. So one of the things when you grow a company really quickly is you really understand the different needs that an ops organization or an ops person brings to the table as you add those layers. So whether it's a small organization or a large organization or medium-sized organization, what are those core things that ops leadership should bring to the table? What should people be looking for when they're bringing an ops person to the table?
I think it's business first, quite frankly. Like a lot of people think operations is all processes and systems and task management and stuff like that, and it's a lot of that. But you need to have somebody that understands business too, to have what they're doing actually align with the goal of the company.
Yeah. 100%.
Otherwise you won't have alignment, and that's kind of key. Like you need to have alignment, downstream. Otherwise things break. So I would say it's understanding business. Like, you could be a great project manager, and a lot of people will say, "Oh, that's a future ops, leader." But once you get to the leader level, like you're leading the business and you're not leading anything else at that point. So
Right.
you got to understand business. You got to understand how it works. You got to understand how we make money, where the margins are. We got to, and the strategy and why we make certain decisions and all that stuff. And then ops actually. So I don't know. Does that make sense?
It does, because, and I guess maybe I can add some flavor to that comment, because one of the most important things to understand is how those processes and that business support the other business units, because you're going to be able to imprint on the other business units and teach them some of those things about process, from a cost perspective and from a performance perspective. And then a leadership perspective, introducing or systemizing. Great example is in marketing. When you scale in marketing, there's different organizational structures and there's different things that you have to systemize to be able to do that at scale. If you've got, one social media client, whoop-de-doo. If you've got 25 social media clients, okay, how many people do you need? How many can they actually handle? Are they doing engagement? Plus, are they doing that? And then you look at the product, from a product perspective, and you say, okay, we're selling this product for this amount, sales team, right? And this is what the price sensitivity is. But can we now tie that back to, okay, we've done the work. We understand how much work we're putting into all of this stuff. And this is the true cost of us delivering on that promise.
Yep.
Okay, well, maybe we need to pivot as far as what the offering is. Or from a overall product perspective, hey, sales team, you need to be, if you're going to sell this product where the profitability is pretty low, you need to pair that with this product. Or from a performance perspective, we've talked about this ad nauseum, identifying complementary products that are going to then help that particular those groups of products be more successful because they overlap in their capabilities. So there's a lot of different ways to skin that cat, but you as the ops person, you have to understand the business, you have to understand the product, and then you have to help those business leaders and be a good leader of the organization by being able to foster that that trust from them to help make them better, and therefore align everything together within the organization, right?
Yep.
Now, the more people you have, the more skill sets that you have to understand and have a skill set inventory for those people to help you deliver on that. So it's funny. I feel like you and I could talk for probably hours on a lot of this stuff because, we've had similar overlap in skill sets and experience, but, there's, from an ops perspective, there's a reason the COOs, your CEOs typically either come from the finance side, depending on the business that you're in, or the COOs, right? Because they're going to be the ones that understand the organization the best. The finance side, if you've got a deficit in, or you need to focus on the performance of the organization, and the COO, if it's delivery and execution on your mission. So
the way we're structured, by the way, we have a CEO, and he's the visionary. He's the guy that's just focused on big come up. Like, my job is to tell him all the bad ideas he has. I'm just kidding.
No, that's a part of it. And if he's willing to listen to it, that's part of being a good organization.
So basically, like, there's a lot of good stuff, but what I said earlier about remaining focused, like, you got to remain focused, because the reason.
What's your F word, Josh?
Focus. That's my F word, and that's the reason why I love that telling him when the bad ideas is there. Yeah, as someone who's about 4 pieces of software deep in 2 or so businesses, I need a you guy. I'm working on it, but I feel that live.
And it's not necessarily that the idea itself is bad. There's usually something there. It's just not now. Like
that, yes.
Well, not now, or it doesn't support the mission, right?
Correct.
Like, there's something to be said. A lot of organizations go under when they try to do too much and they steer away from.
Well, we were right there, actually. That's the reason I got promoted in COO, is because we had one, and we were in trouble, like, financially. Like, we lost money, on the year and burning through our cash, and he had to make a change. And we met we had a quarterly offsite, and basically, we weren't gonna go and hire somebody, so I got lucked into it, quite frankly. But I jumped right in and focused on profit and turned it around. Now we're growing and successful. But the reason why we struggled is because we ignored the core business, and we just kept focusing on the new shiny objects that we really wanted to work because we really liked the idea. But we put all of our focus and resources into that, and then you ignore the core business. All of a sudden, you're getting close to not having a business, right? And so like that was a huge realization. Like when I took over, it's like we need to get focused on the core business, whether you like the our business or not. It is what it is, and we need to focus on that. And then we could grow. So, at our last offsite, which is basically quarterly planning, I'm like, look, guys, 80% of our rocks have to be on the core business. If it's not at least 80% on our core business, these are not the right rocks. And then only 20% max could be on I'm now put into an R&D bucket, basically, like the new product development, shiny ideas, stuff we're going to, try to make work, but not at the cost of ignoring the core business. So,
well, and that's where, to your point, from a business perspective, you look at the overall business and say, okay, which one of these is most likely to contribute either A, to the mission, and B, to the bottom line. So when you're evaluating those ideas on top of that, right, there's a book called Idea Monkeys that I've talked about before that really talks about this, which is you've got, ideas people, and you've got people that are executors, and the ideas people, like, they tend to just explode, right? Their value is in the ideas that they have, right?
Yeah, they're visionaries.
They're visionaries, 100% blue ocean focused people, right? And those are usually founders if you're entrepreneurs or CEOs, right? And their whole point in the organization is to set that strategy and that vision for the organization. But then you have the folks that are the quote unquote monkeys, as they like to call it, who are the ones that are actually going in, doing the work, figuring out what to do, and focusing that CEO or visionary or whatever on what's core to the business to keep the business on track. Yep. And then there's the idea of cannons versus cannonballs, right? And when you get into accounting, making sure that you're looking at the IRR and the 80% threshold before you step into that, you have to evaluate all of those new ideas versus that IRR and whether that complements your core mission. So it's 100% true, and something I agree with. And Josh actually said something in the private chat, and he said, "That's me," because it is him.
It is. No, and it's right. And this is probably, yeah. And Roger's like, that's most CEOs and founders. Listen, and part of it could be because I'm new. And truthfully, part of it is because I'm trying to figure out core business for me is services, right? We provide projects and services and guidance and assessments in the technology space to mostly nonprofit organizations, but to pretty much anyone about 500 end users and under. But that's exchanging time for money, which is what we all do. And there's nothing wrong with that. But at some point, I want a service. I don't want to be a service-based organization. I want it to be a software as a service-based organization.
You want to productize your service,
Right, yeah. So to get there, we need to either productize what we do, which we kind of are looking at, or we have to build something. So part of that piece of it is all these great ideas that I'm trying to slowly narrow down to one or two. But yeah, listen, I'll be honest. I know we're live and people will watch this post, but I already have a list of things for the clips that we're going to put on YouTube after this. And part of it is literally that, because more founders, more CEOs, and even more people in the C-suite who are experiencing this need to understand that focus may be your F word. And you might want to structure to core services, especially like you were saying, if you're in a situation where well, we're not profitable. That means you're doing something probably wrong if you were. So yeah, I have it all written down on the side. You might see me down to this. This is me taking notes because it's me. Hi, I'm the problem.
Yes.
It's me.
And Josh, remember, we don't use but on this show. We use
Oh
and.
yes,
It's an and proposition, not an or proposition.
Yes, and
So
The butt eraser.
yes, the butt eraser. I am the butt eraser.
What is that? That's at 1 hour and 32 minutes. We're gonna throw that one in the clips too.
Yeah,
I'm the butt eraser. The butt eraser is basically like when you say something and then you say but, you essentially just erase everything you just said.
Of course.
Exactly, and that's that's been a theme on here too, and privately, because we all talk outside of this. We're all business owners, and we talk about this outside of the show. But our real now you got it. Now you got me saying it. And one of the things that I tell the guys all the time, and Rob's usually on here with us as well. Everything is it's an and, not an or proposition, because if you say but, you're devaluing everything someone says and say this is the way that we're going, and that's a quick way to have people stop coming to you with ideas and opportunities to get better at what you do.
Yeah, and I talk about improv all the time, and yes, and is a huge part of that, because the one thing that kills an improv scene quicker than anything else is negating anything. Like once you get in that state of illusionment that this is what's going on stage.
When do we get to start heckling you? That's what I'm waiting for. If you're going to talk about,
I will say this. If I go back to so there's 4 things in improv, four classes. I got to 3, and then my wife and I had our first child, and then of course didn't get to class 4.
Well, that's improv.
Yeah, not really. No, my kid was not improv. That was completely planned and staged. But the reality is, if I do go to that 4th class, there is a live show, so I will let everyone know if that happens.
Oh, you just opened the floodgates, dude. Oh, you have no idea. Oh. All right.
I'll let you know.
All right, so in the interest of time, we have a joke about the 107. We're at 102. I'm going to move on to our next topic, because I want to get in what the most important question on the show always is when we have a guest, is their favorite UCF memory and funniest UCF memory. So, but in between there, before we get there, I'm going to ask you one more question. It's, what are the key differences in managing large organizations versus small organizations? And what should your finance and accounting strategy focus on as you grow?
The difference between small and large is you just have more of it. I mean, you just have more people to manage, more tasks to manage, more, you develop more processes and systems, and it requires more communication and more of everything to move more people, is the way I see it. It's the challenge, I think, for any company, but as you grow and get more people, it's even harder to keep your culture alive. So, when you get to the point where everybody's names versus who's that, that's a little different.
Yeah.
But if you start it the correct way and you've got the systems in place for it, then it should work its way, everywhere, basically, as long as, everyone's holding each other accountable and to the next thing. So that's, there's more overhead, there's more, unproductive spend, I guess you should say, when you're bigger. And it's easy to get there, without keeping track of things. So I don't know. I'm really accounting. That's probably my worst area of business is accounting. I'm really good with numbers, but I hate it. I really just focus on profit. I mean, we're a small business. We're very much profit oriented. We're not trying to, sometimes it's okay to focus on revenue or just customer counts. If you're backed by a VC, then you're usually just trying to grow, user counts, because that's where the value is when you go to sell. I mean, you could lose tons of money, but have a million customers and be valued, even though you're not making any money. But for most businesses, I would say that's not usually the case. It's usually just about profit. So, and cash position. And that's usually where I just focus on is, are we making our profit, and do we have a strong, cash position? What's the trends? And I even got to the point where, we for what we do, we always had this key metric of a certain percentage for profit margin, right? And I'm like, all right, there it is. Let's focus on that. And I'm like, you know what? I don't care about a percent. I want to make sure the project's making money. Like, I'd rather have 50% of $1 million than 65% of $200,000. You know what I mean? Like, so we changed the goals. Like, well, it's no longer, a profit margin of this per project. It's a gross profit per project, because that's really what matters. And what that
And
did
you-
is actually, it was quite freeing, because it allowed the product owners to be more creative. It allowed us to be more innovative, because even though the profit margin came down, our gross profit went up. So now we're able to offer more stuff and make everything much more valuable and attractive, that if we were focused on the percentage, it wouldn't have happened.
Well, and the other part about that too is it focuses your sales teams and because you can build their goals and what they're focusing on as far as sales tactics based on that profit versus the margin itself. Because to your point, like I was talking about social media is probably one of the least profitable offerings that you can provide in marketing, right? It can deliver results for your client.
What do you mean by that?
Well, when you look at it at scale, right? So if what you can charge in the marketplace versus the level of effort of the stuff that you're doing, if you're doing good stuff, there's very little margin on that. So,
what would you say is little margin? Like, what's little?
Do you want me to put dollars to it, or do you want me to put percentages to it?
The percentage.
Okay. So I would say if you're
By the
doing
way,
it,
that's something I tell everybody that works with me. Don't ever describe numbers to me in a subjective way, because what is a little or a lot to somebody else doesn't, is all subjective. Like, especially when they're just, they're not in the business, and they're viewing the dollars as like their personal finances. So like $1,000 is a lot of money,
yeah.
but for business, it's not. So anyway, that's just,
Well, I mean, for small businesses, it is.
but we're actually scaling up our social media program now, which is why I'm really interested in.
Well, then that might be a conversation we have offline, because we did scale social media at a pretty large, high clip. And again, it's dependent on what you're offering in that product offering. For me, it's value driven, right? So one of the things that you hear me talk about quite a bit is we measure ourselves not just on the profitability that we take in house, but we actually create KPIs with the client on what we're driving for ROI for them. So their responsibility is, hey, you're going to track this as you move along throughout this process, right? And you're going to give me certain bits of information so I can say, yeah, okay, you got X amount of views, but how much ROI did that turn into for you based on that spend?
Right.
So for you to do that and execute that at a high level, you can make a high amount of 25, 30, 45% profit on social media, but what value are you giving your client at the end of the day?
Are you talking about advertising, or are you talking about something else?
No, like I said, we're 109 in, so it's probably a you and I conversation, especially if you're looking at doing this. No. I mean, this part is really like, this is what we talk about, collaboration and, finding people who have different experiences. So if this is something you guys are looking at specifically, that's a longer conversation.
Well, it's something we're doing right now. And the margins are good for us. And not only that, I actually, unconventionally, if you haven't noticed, I'm very unconventional. I actually build the people that are running the program. So we have a producer and a social media person.
Yeah.
Their salaries are actually considered a COG, not operating expense. So they are actually part of a cost of sale for that program. And which as a private company where we don't have to abide by certain accounting practices,
Yeah.
we could do that. Like if we were public, we wouldn't be able to do it. But we are private, so we can. So even with those built into it, we're still at a high, our profit margin, even though I just went on a rant before about focusing on gross profit, but when you look at the margins, it's equal to the margins of all of our successful things. So I was just curious, and I wanted to talk to you offline about like what.
Yeah, I'll tell you what my experience has been with that. So in multiple marketing businesses, when you're doing it at scale. So we can talk about that offline because that would be a long conversation.
107.
Yes. Yeah, we're way past 107. All right. But I feel like the large organization versus small organization conversation. I think the biggest thing you hit on there for me was just communication, right? So canonizing communication is important as you scale.
Yeah, I'm a firm believer in radical transparency. We meet weekly as a team, every employee, and I basically, other than HR problems, I tell them everything. I tell them what worked, what didn't work, how much money we made, didn't make, what's coming up in the pipeline. Like there's a lot that only I know. I mean, there's very little that only I know. You know what I mean?
Well, I agree. And I mean, that goes back to what we were talking about earlier, and adding accountability and visibility is important for all of that. And then measuring people on that to add that accountability to their piece.
Yeah, I know you want to go, but I'll just say this one more thing. We went through this at another company, went through this whole exercise of finding out the key motivators for all of our employees. And we had like 50 or 60 employees at the time. And one by one, it was in one of these assessments. But we went through and what I noticed is that it was high. It was like 95 or 98% or something like that of all the employees had being aware of what's going on in the organization as one of their key motivators. And I'm like, well, if it's 95%, you might as well treat it as 100%. So I think it's just people in general just always want to know what's going on, which is why communication and transparency is so important.
They perform higher. And if you have a culture, if you build a culture and instill that and canonize that within what you're doing as an organization, as far as transparency and visibility, one brain or 1,000 brains or 100 brains or 50 brains are better than one, because they're going to see, and this is where we advocate on process mapping, you're going to see where those high level critical points are. And when you look at those critical points, you can delve into those a little bit more deeply. But if you're creating a culture, a change culture, then what ends up happening is those individuals at their level are seeing opportunities. And instead of just saying, okay, well, we always do it that way, they're bubbling up and we're empowering them, right, to make changes at their level without it even getting to your desk, right? And then them just saying, hey, we made this change and these were the results. If you're doing that and empowering that at a lower level, small changes lead to or small innovations lead to big change. And that's in the bottom line and from a process perspective and everything else. So that's something we've advocated on here for a very long time. Yeah. And I love that you said that. Okay.
Big doors swing on small hinges.
There you go. It's another way of saying it. So, all right, Guy, let's go ahead and get to your transition a little bit, because we're definitely going to have another show with you on here, because this has been great. And I feel like if you and I had a few bourbons, we could talk for several hours.
I'm a Scotch guy, but yes, absolutely.
Well, you can have a Scotch. I'll have a bourbon. All right. So
someone needs a beer, right?
Beer.
Bourbon.
Bourbon.
I'm actually brewing cider for the first time. I'm making some cider.
Okay.
Yeah. So hold on. There's content for us. We're gonna go have homemade cider at Guy's house.
That works for me.
All right. Guy, what's your favorite and UCF memory? Let's start there. And if you brewed your cider and brought it to Memory Mall, I'm sure it'd be a smash hit. But we're not talking about that right now. Go ahead. Your favorite UCF memory.
We've been living in the same house we're in right now for a while, since 2004. And I was still in school, right towards the end. I was actually the president of the ad club there. And we were in some president's meeting. I forget the details, but we're in a president's meeting, me and like some other, president of clubs, whatever. And then some guy walks in. It must have been, who was the AD at the time then? Steve Orsini?
Orsini, yeah.
Yeah, it must have been him. I wasn't really into like that deep back then, but
Like most students.
he pulled us basically, and he asked a question like, it was something like, do you believe in second chances or something like that? And when in retrospect, he was asking about O'Leary, and because of the resume thing, and it was right around the time of hiring, and then so then we put a deposit on, and I'll bring it back to the house. So in January of 2004, we put a deposit on his house, but we weren't closing until April. And then in like February, I think, we got a call from it's still from the builder. So we got a call from the builder, said, "Hey, you're never gonna believe we just bought the house next to you." We're like, this is just a regular neighborhood. We're like, who? Like he's like, George O'Leary. I'm like, really?
Whoa.
And so we ended up being next. Literally, we had shared fence lines and stuff, and keys, and we were next door neighbors with O'Leary for
That's awesome.
entire tenure.
What was that like? Did he yell at you for not mowing the grass appropriate to the appropriate height? Or, I mean, how did that go?
Dude, the guy just worked. I'd be taking down my garbage pails at like midnight, and he'd be just getting home. And then I'd be going to work next morning, like 6:30, whatever. His car's already gone. Like the dude just worked.
That's awesome.
And
was he meeting with Brett Key at
4
they had parties. Not a lot, but they did. And Sharon was really nice. She watched our dog a lot, and she always gave out the big candy bars during Halloween. So they were just normal people, man. Like all they see is the persona, the football coach persona and stuff. But they were just as normal as you could get.
That's awesome.
And I remember also in one of the papers, George was telling the story about, it must have been in the Sentinel, about, neighbor walking up and down the sidewalk, say, "Hey, coach, how's it going?" That was actually my father-in-law he was talking about. Taking the dog up. So, that was pretty cool. This is him. Like So we were really excited about the house. So we would come here a lot and just we didn't have the keys, but we'd sit out in the back patio, just kind of like dreaming and waiting, And then he ended up being home, and he was outside in his backyard with a cigar, and he comes over and he shakes our hands, introduces ourselves. He's like, "If you ever need anything, just let me know." That's how he basically opened the relationship. It's like as any other good neighbor, And that was about the most conversation I had with the guy, because he was just always working.
Well, it's funny, it's funny you mentioned, I've had my own experiences with Coach outside of the football field. And I will say, and I will echo, because I know a lot of players that played for him, right? When it comes to who he is as a person, and not off the football field, probably one of the most genuine people you'll ever meet, and always took time to talk to people. Never big timed it. He was never too big for any particular moment. So no matter what you think of O'Leary on the field, off the field, he seemed to be genuinely a very good and genuine person that was supportive of everybody he engaged with.
Yeah.
I'd say even at the beginning when he first came in, if you were there in the moments, if you were helping Gert Garman carry his cardboard Coca-Cola out to do some marketing for the team, like if you were there at that point, he had some of these "you're inside the circle" meetings when before things happened, and that George O'Leary that I remember is even different than the lunch with George O'Leary.
Oh, dude, his quips were legendary.
Those were wonderful.
So.
But even that, as relatively loose as that was almost a different persona than you're in the circle and we're having conversations about what we're going to do here, which might be very equivalent to Guy's next door neighbor anecdotes. So
all right, so that's your favorite. What's your funniest? Like when you were in college, what was the funniest, craziest thing that you did or that you remember? And obviously, we don't want to get you in trouble.
I don't know, man. I was pretty boring in college. Like I did all my partying in high school. So by the time I got to college, I was like, I'm kind of done with that, you know. Funniest.
Do you have like a Citrus Bowl memory or anything like that?
Yeah, I do. I don't know if I would classify it as funny.
I don't know. I always tell the bowl queen's story where you're in the Citrus Bowl and you had the person walking around. It was called the toilet bowl because we're in the Citrus Bowl. She had a plunger, like toilet paper wrapped everywhere, and it was a UCF sanctioned event. That's how bad our marketing was back then. I'm just saying.
Yeah. I don't know. I'll think on that.
Well, that's good. So you think on that, and we'll bring it back for the next show because we're definitely bringing you back.
All right.
So, all right. So, closing thoughts. Anything that real briefly that you want to impart? Any, any lesson or important thing, and then also how can people find your organization and what you do?
I mean, keep it small and keep it simple. I guess is my closing thought. The bigger you make something, the more complicated it becomes, and the harder it becomes to accomplish anything. So just keep it small, keep it simple. So stay focused. So I run the celebrity branding agency. We're a personal branding agency, and we leverage media to grow personal brands. So we've done plenty of books. I just co-authored a book myself with Dick Vitale.
Where can people find it?
Oh yeah.
Celebritybrandingagency.com is our website.
Oh, okay. So it's on. Okay. I didn't know if you had
the
it on
book.
Amazon.
Yeah, it's on Amazon. The book's on Amazon. It's called Never Give Up. And my contribution was my personal motto, which is keep moving forward. I'll actually be down in Sarasota where he lives later this month for our bestsellers party because I hit the bestsellers list. So we're gonna go celebrate. And we've done other things like we even leverage film and documentaries and stuff like that. So we've done the Rudy.
By the way, if you need a production team, I'm just saying.
We got pretty good ones. We did the Rudy Rudiger documentary. We did the Dick Vitale documentary that's on ESPN Plus and Disney Plus now. And we actually I don't know if I could say her name right now, so I won't. We just premiered a documentary called Hero, who was with Mandy Harvey, who was that deaf singer from America's Got Talent.
Yep.
Rami Adelecki, who is an actor, former Marine, and he was in I think the movie Ambulance. And Dominic Cruz, who was the bantamweight champion in UFC stuff. And then I forget her name, but she was one of the women. She was a woman part of the crew that rode from San Francisco to Australia on their own. So we premiered that, and it's kind of like their stories all kind of put together. And we've done a lot of cool stuff. So we do TV shows and all that other stuff. But we basically will leverage media to what we say is we'll make you the most interesting person in the room. Is another way of putting it. So
awesome. And Josh will make sure that we get that link into the YouTube channel. So for anybody who's looking for that book, we'll provide that link in the description. So, all right, awesome. Well, you've made all of us proud as fellow Knights, and I love the fact that we got to connect and talk about these things. It sounds like we have a few things to talk about outside of this show. In addition to that, folks, if you need any help with personal branding, Guy's company does a really, really good job with personal branding, and he's probably going to help me at some point. I don't know. But
for entrepreneurs specifically, it's a business case of personal branding.
Exactly. So
for clarity purposes, because sometimes we'll get other people. If it's not for business, there's no ROI for it. So
Yeah. So for me, obviously, as an entrepreneur,
Yeah.
we'll probably work together at some point. But if you are an entrepreneur, you want to break into personal branding, Guy's team can help you with that. Obviously, Alan and I would love to, but Guy specifically focuses, and his team focus specifically on that particular facet, and they do a great job. So make sure you check them out. Remember, the goal with all of this is Knights helping Knights. So we want to make sure that we're using each other for those services. So if you are in the market for those things, please make sure you check out Guy and his team. So we're gonna put a pin in it there for now, and there will be another episode, and I'm gonna let the guys talk about what they do real quick, and then we'll get out of everybody's hair. So Alan Levin, Smarty Pants with a Z, who hasn't said very much.
That's me.
This evening. Tell people what you do and how they can find you.
Yeah, Alan with Smarty Pants with a Z. We're a full-service digital marketing agency, the Zorro.
That's right.
Yeah, based in Fort Lauderdale, and we help small business clients scale and grow through digital marketing. If you're looking to find me, like I always say, I'm active on LinkedIn, and you can also find us on our website, smartypantsmarketing.com.
All right, awesome. Josh Lazar, what do you do and how can people find you?
Josh Lazar with a Z too. We should tie that together in a nice.
Listen,
thread.
no, we can only brand the Z to one of you. So Alan's already taken that.
Well, laser with an A then. Hey, I'm Josh Lazar.
Laser with an A. I like that.
Laser with an A. I'm Josh Lazar, CEO of Tech Think Tanks, and I'm going to use focus as my F word today. The core of what we do here is provide services, assessments, and strategic and operational alignment through technology. So if you need a cloud migration, if you're looking to understand what's going on in your organization, if you need a fractional CIO, we have a team of them here that are there to help you understand more about your business or guide you through some turbulent times. You can find me at techthinktank.com. Josh at techthinktank.com is my email address. And since that's core on the side, we do develop software too. One of the things we do, which was a very small project with some UCF students, was goldenknightsclub.com, which Roger will talk to you about in just a moment, Roger.
Wow, that's the perfect segue. Yes. So before I talk about myself, I want to talk about the tool that we built for you, Knight Nation. And that's goldenknightsclub.com. Check it out. It is your marketplace to find fellow Knights and their services, and also to find folks who need your services. So again, it's completely free. It's designed to bring Knights together. So please make sure you're taking advantage of that. Sign up. We're not collecting your information. We're not selling your information. We're not doing any of those things. It's simply there to help us do business with each other. So make sure you check it out, goldenknightsclub.com. And for all of your marketing needs in small business, legal, medical, higher education, video production, VR, we actually do VR as well. So we produce VR for folks and 3D animation. You can check us out at 7lights-agency.com or r.phipps at 7lights-agency.com if you need any help with that. Or for your consulting needs or business lending needs, you can hit me up at bossleadershipsolutions@gmail.com. So that's been episode 19. I saw the folks that are viewing. Some of you stayed the entire show, which is an hour and 28 minutes, which is a little bit longer because Guy was so awesome that we're bringing him back for a second show. Again, make sure that you check us out. We're posted on YouTube, and always remember to like, subscribe, and grind. Thank you, everyone. Have a good evening. Go Knights, charge on.